Investors, welcome back to Green Money Momentum, where we talk about market movements, making money, and money momentum. I'm your host, Trevor, and we are here for the first daily talk of stock for the month of October. And things were pretty spooky today for some, if they were falling into the fear, uncertainty, and doubt that we are seeing around the government. Now, the markets today were about 50-50, so a coin flip depending on what you were in. Technology was very green, however, so risk assets are looking great, which is exactly what we are always talking about on the markets. We love risk assets because, as we know, the main thing that we are looking at this year is the Federal Reserve and what they are doing with interest rates. And today we did see the official government shutdown. So just as this reads right here, the government shutdown happened today on Wednesday. It entered its first shutdown in 7 years, putting hundreds of thousands of jobs and billions of dollars in output at risk. A nothing burger this truly is, in my opinion. Just as this reads, the last government shutdown was 7 years ago. So this does happen periodically, and really no concern, in my opinion. This to me is about as much of a nothing burger as when the government talks about the debt ceiling. Every single time we see that debt ceiling get cracked, and we continue to have the spending go upwards. And so in this situation right here, these hundreds of thousands of jobs at risks and billions of dollars, well, everything is going to work itself out. The government is not going to stop existing. Some may be living in a fantasy world wishing for that, but don't worry, the government will be back very soon to rule over you once again. This is just a temporary pause, and probably for a bigger reason, because as this reads right here, the key ADP jobs data showed that private payrolls declined in September. And so with this government shutdown, we do have on Friday the BLS numbers, the Bureau of Labor Statistics numbers for the jobs report. And we saw once again that ADP numbers were bad, and steadily the jobs market has been getting worse. And so we got to think about the perspective here from those who are in office. So we have the Federal Reserve, who is being data dependent. They want to make sure that they are not going to lead to higher inflation with their rate cuts. And then we have the White House, who doesn't want the Federal Reserve to be data dependent, to say they want to see the Federal Reserve just cut rates all year long. Trump has been very critical of the Federal Reserve, and right now the Fed is in a bit of a pickle because the Fed has said that they are going to be more stimulative. They did cut rates in the last meeting, and right now there is a 99% projection, a 100% projection that they do ease on rates once again. And so what we are seeing with this, if the government does stay shut down till Friday, they won't have to give over the jobs reports to the Fed. And so now the Fed is in this pickle because these job reports could have been maybe the last thing for them to change their mind on interest rates, but the president is not going to allow this to happen. There's a lot of tension right now around the government, but everything will work itself out because in general, the Fed is going to continue to cut rates. And now that they most likely won't get that jobs report on Friday, they can't get out of this pickle that they have put themselves in. And let's just think about the bigger picture. So we do have the perspective from the Fed, we do have the perspective from the president and the White House, but the bigger picture perspective of everything is the Fed and the government does work together, and they are intertwined. I mean, recently we have seen that Trump put an appointed official into the Federal Reserve, and even though the Fed is technically independent, they are working together for the better cause. So even though there is tensions between Trump and Jerome Powell and the Federal Reserve, overall they are working in the direction of making everything better. And if the Federal Reserve does change expectations at this point, this could cause a lot of damage to the markets and a lot of progress progress has been made this year. I don't see the Federal Reserve doing this right now. They are more dovish than hawkish. Dovish being bullish and having more interest rates most likely coming. So I do expect the rally to continue within the markets. And today with the government shutdown, I think that this is actually a positive just because of the jobs on Friday. So now with that being said, we're going to hop into the individual stocks. And despite the markets being more green than red, and this stock for the most part being more green than red, it did have a red day today, and that is Robinhood. So we're going to start out here with Robinhood stock, and it was a bloody day within the hood, but only by 2%, just a 2% drop in Robinhood. Not too bad, especially when we look at the bigger trend that we have been seeing. We have had this rising level of support and resistance, and in the recent term, after these two massive green candlesticks, we did tap on this highest level of resistance, and today we were rejected right at this level of resistance. So in the short term, there is the possibility that we do return right back to this dashed line that I have here, because with this rising support and resistance, we have maintained, that wasn't supposed to be drawn there. We have maintained right in the middle of this trend for a lot of this time, but overall we are in this bullish trend. And with Robinhood, I do believe that we will eventually break out into this higher level here, and things will become super bullish in Robinhood. So despite having some bleeding today in Robinhood and maybe even looking a little overvalued on the indicators, we are a bit high on the relative strength index and the MACD. I am not scared at all. I do believe this trend will continue. And if Robinhood does bleed, this is a blessing for any investors who want to add into Robinhood for the first time. In my opinion, again, as always, get the disclaimer out of the way. This is not financial advice, just entertainment. But Robinhood, to me, is the perfect growth stock because Robinhood, they have tremendous earnings. They are hitting quarterlies. The next one expected to be the largest ever, up in the $1 billion range. They are in a positive EPS, and this company continues to grow, and there is so much innovation in Robinhood. So right now sitting at $140. Some investors could see this as expensive, but I will say the exact same thing I said at $70, which is some investors will see this as expensive. And I was saying that at the time because when we do look at this growth trend, Robinhood was just at $35 in April and had a quick 100% jump from there to 70. And now we have had another 100% jump from that point. So I've been calling Robinhood out this entire trend up, and that is just because in this situation, this stock has a lot of positive catalysts and there is a lot going for Robinhood. And in this situation, I see the trend as your friend. And then when we just look at the overall fundamentals of Robinhood, we also have tremendous fundamentals here with 127 billion on the market cap. I do believe that we could soar a lot higher to $1 trillion. So still a lot more liquidity that needs to go into Robinhood. And then they have a beta of 2.05. Beta basically representing how the stock moves in correlation to the market. So at about double the speed. And with that, I am playing with Robinhood for big gains. I am in Robinhood options. I also have Robinhood stock for the long term. And then also I am playing in the short term with the double leveraged Robinhood, which the ticker for Robinhood, of course, is HOOD, and this is ROBN. So every 1% that HOOD goes up, Robin goes up by 2%. Tremendous growth I expect to continue in Robinhood. And then just yesterday, Bloomberg put out that Robinhood reported plans to expand the prediction market outside of the US. This is massive because in general, Robinhood is expanding. And this year has been the most growth for Robinhood ever as a company. We see that they are bringing tokens out, the digitalized tokens out to the European Union, and they want to bring the prediction markets out to the European market also. So Robinhood has all that going for them. They are also becoming a true fintech brand, which I have mentioned many times. So they are becoming a true bank, which could open up a lot more for Robinhood, because right now they are just a brokerage. They could become a true bank. Also, Robinhood does have the predictions markets and the sports betting. So when it just comes to places where you could put your money and essentially either invest or gamble, Robinhood is the perfect platform, and it is becoming the all-in-one for finance, crypto, predictions, markets, stocks, options, and so much more. So I love Robinhood stock, and right now I have a price target on Robinhood at $175. And in my opinion, Robinhood could easily hit this and go much further beyond there because of all of the momentum that is within Robinhood, everything that we are seeing in terms of catalysts. And then when we talk about macros and the bigger picture, when it comes to quantitative easing, again, the Federal Reserve and the government are working together for the betterment of the market, and QE is officially coming back. The Fed just cut last month, and they should cut this month again. And now we're going to get into our next stock, which is another favorite on this channel. He sits in the background back there. He is just waiting for some big moves. He has been coiling up himself. That stock is BigBearAI, which once again hit $7 today, and we have seen a turn in momentum once again. As we could see, we are rising again on the relative strength index. When we look at the MACD, we did start to trail off a little bit. Volume did start to go towards the bears, but things were positive today, and it does look like we should continue to see this bounce up. And in general, Big Bear is sitting at a very interesting spot right now because we are right in this level of consolidation. The highest level here being right around $8.50, and the lowest level being right at $6, which Big Bear just tapped off of 6 yesterday, all the way back up to 7 today. So very excited for what is happening within the Big Bear, just like Robinhood and how I am playing in Big Bear. I am playing in Big Bear the same as I am with Robinhood. So I hold Big Bear for the long term with shares. I also have options contracts with Big Bear. And then in the short term, I am playing with the double leveraged opportunity of BAIG. So if you want a bag in the Big Bear, look at BAIG, because this is another opportunity that provides 2-to-1 leverage for the underlying Big Bear. But myself, I am very bullish on the Big Bear, very excited for what is to come with this company. We have followed it all year long. This is another company similar to Robinhood, how Robinhood has had their most growth ever, how the company, the underlying company itself, is doing so much. Well, same with BigBearAI. We have seen a tremendous customer acquisition from Big Bear this year. We have also seen them go international out at the Panama Canal, and also being at international airports, a lot of domestic airports here in the United States. So a lot of growth with BigBearAI, and with their last earnings report, this is initially what did shock Big Bear investors and did send the stock down. So again, we were in this level of consolidation for quite some time, and then right at their earnings report, many investors did perceive the earnings as negative, and there were some negatives in that earnings report, but also some positives because they did announce their largest cash reserves ever. So their strongest balance sheet they've ever had, yearly lowest amount of debt the company has ever had. So things are looking very positive for the Big Bear. Now, when it comes to earnings, yes, there were some negatives. We do see that their revenue has been decelerating, but we must remember with Big Bear, they have collected a lot of those contracts this year, and they have even said in earnings reports before that the cash hasn't actually hit the account yet. So many of these are contracts that Big Bear is still waiting to be paid for, and they are still picking up new deals because we just recently saw Big Bear announce a new partnership. That was when we did have the big jump off of the 200-day moving average. So things are looking very positive within the Big Bear. Big Bear is a value opportunity different from Robinhood. So where Robinhood has been true growth and where the price in Robinhood continues to accelerate, same as their earnings and everything else, Big Bear is still a value opportunity. So Big Bear is still proving itself to Wall Street, but I do believe that this is going to be the largest year for Big Bear ever. Right now, we are just at $7. Again, I have a lot of leaps for this company. I am very excited for what is to come. I do believe that Big Bear will get back to the double-digit range here sometime in the near future. It's not if, just when. Again, just my opinion, but I would be curious to hear what everyone else thinks in the comments section below. So please let me know if you are invested into Robinhood or if you are invested into BigBearAI or any other opportunities in the market. Thank you all so much for being here, and I will see you in the next daily talk of stock.